Oh, hmm. Interesting. Okay. What's up? This is Noble. It's been a minute. I've been missing you. I'm sure you've missed me. Hopefully you have. We're going to have some fun tonight. As always, welcome to Insider Trading. Welcome back. It's been a minute. I'm going to turn this music down. I got to get back in the flow of things, so put the music on, chill for a second. We got a lot to cover today. I got some live stocks that I want to cover for you guys. Just, anybody who's in Insider Trading, a private group, well, it's actually a public group on Facebook. 25,000 people in it. Shout out to my cousin Joel, man. Joel Harrison and I started this group 10 plus years ago. I'll never forget it. Joel was like, yo, they got this new groups thing. Let's do it. I'm the thoughtful, meticulous, right? I wanted to think it through. Joel was like, yo, I already started the page. I already started the community, right? And 10 plus years later, it went from 2 people to 20 to 500 to 1,000 to 10,000 to 20,000 to 25,000. Now, of course, everybody's not active, but the number is still the number, right? So thanks for being here. We're going to have some fun tonight. A lot to cover, man. So much to cover. I want to go back. I want to show you some things that are really key. I want to speak to investors and traders. I'm not a one-trick pony. You got some people out here that can only talk about investing. Some people only talk about options. You should be able to talk options, futures, leverage, crypto, long-term investing, buy and hold. We want to be masterful with this craft. And I don't just mean people who go live and teach and educate like me. I mean everybody. You really should get into this to master the financial markets. Knowing you'll never master everything, that's not the point. It's the pursuit. It's the journey, right? So let me check some things really quick. I got to check a few things real quick here. Because I don't actually know. I do know, but I don't know exactly which Facebook page I wasn't able to go live on, so I got to check something really quick. Okay. I'm live there. Cool. Let me go over here. Oh, I'm live there too. Interesting. Okay. I didn't think that worked, but it did. Okay, great. Great. Okay. So what I want to do, for those who are new, my name is Noble Woods. I love what I do. I've been in the financial markets, man. '08. I got my MBA. I started making 6 figures at Bank of America. I was blessed. God blessed me, guided me to right, I wanted to be an Apple brand management, creative side of the business, advertising, advertising, market research, PR. I love shaping brands, cultivating the essence of a brand, communicating what a brand is, and clearly, so clear that people can know if it's for them, right? To compel you to solve your problems with a brand's services, products, whatever it offers, right? So, but that didn't happen, and I'm not turning down $94,500 from Bank of America. No way, I'm turning that down. So I went to Bank of America, and this is the heart of the recession. Long story short, I started trading. I was making money. I was struggling making money. I'm back making money. That's the journey. Ups and downs. It's not for the weak. It's not. But no, seriously, there's so much context in between from the time I started till 15 years in. And I love what I do. I really do. So let me turn the music down. Let me go here for a second. I want to show you guys something. Let's see. Hopefully this will come up the right way. Be patient with me. I'm getting back into, the technical things, right? To produce a live quote unquote show, right? You got to have everything in place. So, see, didn't even do it. Okay. All right. I knew that was going to happen. So let me go back. I know exactly what to do. Hold on one second. I want to show you guys something that's really special to my heart right now. and I want to make sure you know about it. So here we go. Live. I just want to say it real quick. I don't try to hard sell people, but I know there are literally millions. I don't have millions watching, but there are millions of options. I don't think you'll find anybody out that does it better. No disrespect to all the, educators that I know of. I know the same names that the people who, are doing their thing on podcasts and social media and all that. That's great. That's great. But when we start talking about systems, technical analysis, and understanding that trading is, at the core, it is quantitative analysis. I was made for this. I love stats. All of my roles at Bank of America had some sort of quantitative analytical perspective to them. And I love being able to show people where at on a chart does price have literally like a statistically higher chance of continuing in that trend. To say it simple, when is the best time to get in to make the easiest, fastest money? You can't figure that out with just price charts. You can't figure that out with just patterns. No, you need to have a deeper mathematical understanding of how these indicators work and what is volatility at the core. What is volatility? We say it, but what is volatility? So I've been working for the last 2 years really hard, building up, I did some little pilot classes. I learned that in corporate America. This class is premium. It's going to be really amazing. It's 4 weeks live with me. We're going to be in class every 3 times a week live. You'll get some little drops, right? Some little digital drops, some things to do virtually every day. Tuesday, Thursday, Saturday, 80 hours of content. And at the core, you're going to learn my technical analysis system. That includes, it has this statistical lens, because price and technicals and indicators, all that's great. But where on this chart does price have the highest statistical chance of continuing in that direction? 99% of gurus cannot tell you that. They can't. And I know, because I've been teaching kind of everybody's students, all the big popular traders. I've been like, people come to me after those classes. I still don't know when to get in and get out, Noble. So that's it. So I'm launching that today. If you're on my email list, you'll get the email real soon. Tomorrow, you'll be able to sign up. You'll get all the information. Tons of information on the page. So that's that. I'm excited about it. You're going to hear me talking about my new class a lot. I got futures coming up as well. But for now, today, what we're going to do, we're going to do what we came to do, which is get into the charts. So let me pull this up, and I want to see what stocks people gave me to look at. Okay, I got my list. So we're going to look at Disney, Microsoft, AMD, NVIDIA. We're going to look at SMCI. I don't even know what that is. We're going to look at gold. I'm going to look at the S&P. So let me do this. Let me start here. For you guys. Let me check something. I'm still not doing it. Why is that not? Oh, okay, cool. I'm using, for those of you who, stream live. There we go. Okay, got my charts up. But let me do one more thing really quick before I dive into this, because I just want to make sure you guys can see the charts based on how you probably see them, which is a little different than how Noble at this level sees them. So usually I have to change my things kind of back to like what, just regular, if you will, folks use, and not look at things with what I use, because it would confuse you. So let me just do that really quick. If you're on live, you're watching live, let me know where you are. Where are you watching from? This is a live interactive show. I was using a different streaming service last few years. I changed to something that's better. I can use I can get the 4K with the lights and everything, right? Make it real professional, nice for you guys. But this is interactive. So if you type something in, you can let me know where you are. You can ask a question live. I'll see the question. Once again, be patient with me, because I'm getting back into live streaming mode. But I will be able to see your question and answer. So let me know where you're watching from. Let me know where you are. I'm in Atlanta. I actually don't need these headphones, but I'm going to keep them on just for that look for today. You won't see me with these next week. We'll go live next week too. So let's do this. Let's do this. I'm going to start off real nice and easy. Real nice and easy. Let's go back just for a second. Let's do a little quick recap. Where did we come from? Where are we right now? Oh, you know what? I should leave this on my chart too. Actually, let me save this really quick. I'm going to save this. Call these temps. I'm going to save that. Let me get rid of everything. Okay. So this is the S&P. I want to go to the S&P month chart really quick. Let's go back just for a second. Where have we come from? Where are we today? Where is the market? Should you be buying, selling? The first thing you always need to know is where are we? Where are we? And you need a higher level, right? You need that 30,000 foot view. I know people love to jump to intraday. Everybody wants to be a day trader. It's super hard. 95% of people will never build the discipline, the skills, have the community coaching or systems to do it. I'm sorry. I know that might have, but I need to say that because I want to shock you into the reality of the longer time frames and bigger picture is where most people need to start. If we started higher time frame, less fakes, clearer trends, easier to analyze, less candles, literally it's simpler. We started there, and then as we got better, we went to faster time frames. People would have more success in trading. We do it the opposite way. We start with the hardest thing and ignore the easy money. It's crazy. So I want to look at the month chart to get the highest view. I could go to a year. I could change it to different views, but we're not going to go out to a year. I just want to start with a month chart. S&P, all right? And let's go back to COVID. So I'm going to put a line right here. I want to show you where COVID was, right? So you get a view. So COVID was right here. 2 really bad months. Oh, 2 really, really bad months. And without any indicators on my chart, because I don't need them, naked chart, you should be able to analyze a naked chart and pull some things out. But there is a deeper level where just price alone does not give you, right, that statistical lens that I talk about, I teach in my class. And I can't even really pull it up and show you certain things here because it would take so much time for me to explain, right? So I do my best job to kind of talk to newbie traders. You brand new, you don't even know, right? You really don't even know what this is. And my folks who have some experience, you know, my folks who are killing it, you're doing your thing. You probably don't even need me. You're just watching just to watch, right? So this was where COVID was. And what I said in my post, in my group, I said, quick recap, 2020, strong uptrend. All right. That's 2020. Where's December? So really, really basic. I don't have to draw lines and draw channels, but I will just for some fun. Sure. All right. So that's a strong uptrend. Right. That lasted from these lows of March 2020 all the way to December of what was that, 2021, right? So that's pretty amazing. Hopefully you didn't miss that. That's what got so many of you guys interested in trading. It's what probably brought you here. It's what brought out a million gurus that you never heard of before COVID. Everybody started making money in this very easy, strong uptrend, statistically probable to easily continue to make money if you simply were buying stock or if you knew how to buy call options, right? As an options trader. It wasn't a tough year. You can see that. You can literally see it on the chart. It wasn't a tough year, right? But things changed, right? Uptrends don't last forever. So what happened? Then we went into a very classic downtrend. And actually, I want to show you that downtrend. I'll do it this way really quick. I'll put a line here, right? So we had from these highs to these lows, all right? So that's December, January, November. We started ranging, getting really tight. Started making new lows, pulling back. How do you know the difference between a pullback? Should I be buying these dips or should I be shorting the market and riding the trend down as it goes lower? Should I be buying the dips Or should I be selling these pops to ride it back down? Which one was easier? Could you have done both? How do you do both? What indicators would have told you which way to go? It depends. Are we talking investing or trading? All right, that matters. That always matters. So what I'm going to do really quick, I'm going to bounce around. I'm going to show y'all some stuff today. Oh, and let me say this too. For my people who are brand new, let's keep this really, really simple. The red candle just means price on this chart. Price opened at 45.76. And during this month, price went lower, 43.94. So red just means during that time frame, price dropped. Actually, you know what? Let me do this. Let me change the green. I'll change the green so you can see it a little bit better. So there we go. So anything green pushed up. Green is up, red is down. All right. Let's keep it really, really simple. I can't teach y'all. I can't teach like right now, everything to just even read the charts, but that's all you need for today. Real basic. Red is down, green is up. I taught middle school kids this back in 2010 and 11. Ron Clark Academy here in Atlanta, Georgia. Middle school kids, I was teaching this right here, what you're saying. How to identify support and resistance, channels, right? Doji candles, Morobuzu candles, middle school kids, right? So you can learn this really fast, right? I want to go to a week chart though, because I want to kind of break down that downtrend. I know from January, right, to October, right, when we made those lows. I know that was a rough year for a lot of people. Why? Because we went from such a very easy market. We went from easy bullish activity. We went from ease, and then we just changed direction. You probably thought I was going to say we went from ease to very hard. We didn't. That year, that downtrend was a classic, very clean downtrend. We went lower, we popped back up, we went lower, we popped back up, we went lower, we popped back up, we went lower. It was very, very clean, predictable, cyclical. It happens. But people didn't really get enough skills during 2020. Everybody jumped into the market thinking it was going to stay simple, easy, bullish, and all we did was change direction. And that's why trading's tough, because if you don't understand trend changes, you'll lose all of your money. You really will. Quick story. I did, how many did I have? How many did I have? I probably had 200 plus one-on-one consults with people from my group Insider Trading in 2020, maybe a little bit going into 2021. I'll never forget, there was one lady I talked to. She did a really deep, thorough analysis of this one specific company. I forget what the company was. She invested. She pulled some money out of like her either 401k or IRAs, and she had some money somewhere. I don't remember the story perfectly, but she pulled some money out. She basically, she invested hardcore in that company. She believed this was the time this company was going to pop. And it did. It did. Chart went straight up, just like what I showed you. All right. Chart was just going straight up. She turned 150,000 into about she turned $50,000 into about 160,000 with one stock. That's $110,000. Capital, gains, profit. She made $110,000. And when she came to do the consult with me, because she didn't understand how to look at a chart and know when a stock is changing direction, reversing, not just a pullback. You can't keep buying dips when something is going lower that's really not coming back. You got to be able to recognize when we change direction. It's so key. So by the time she got to me, I don't even want to tell you how much. That 110,000 that she could have capitalized on, she didn't capture 100,000. She didn't capture 90. She didn't capture 80. She didn't capture 50, 40, 30, or 20, or 10. She watched all that money slowly come all the way back to where she started. I get all the stories. I get all the best stories. People tell me everything. They really do. And I'll never say names, but I share a story like that to let you know this is not something you just jump into just to jump into it. You need skills. You are competing against the highest, smartest people in the world. All right, so let's look at the downtrend. I want to show you the downtrend real quick. This is classic downtrend. This is everything you see in the books. Picture perfect. Picture perfect. The crazy part right here, when you had these two, you could have then drawn, right? You could have drawn a trend line right here. All right, check that out. That line right there. Matter of fact, let me extend it all the way across. See how we got above it, and then we pulled right back to that same area. We got above it, we pulled back to the same area, that same line, and then we took off. So now we've been right. This year's been a bit different. All right, and if I go back to the month chart for a second, then you'll see a lot of you'll see all those swing lines, those highs and lows. So yeah, we made highs. All right. Matter of fact, I'm gonna go to no, I'll leave it on SPX. SPX is the S&P 500, if you didn't know. Which, the way I teach it to my kids when I talk kids, it's like the all-star team. Why bet on LeBron or Curry when you can bet on the all-star team? LeBron might get hurt. Right? Curry might get into a slump. He might get the flu, have a bad 20 games. So, all-star team. That's why every single day on every financial channel, they're always going to talk about the S&P. Every single day for the rest of our lives, people are going to be trading the S&P futures and options and buying stock in it every day because it's the all-star team of the market. All right. Okay, so back to the chart. So downtrend, let me show you this. And I know this period in here was a bit weird, but I do want to show you this. I don't know. And this is why it makes so much sense to look at these longer time frames. Because this candle that formed September is such a key time. I want to talk about September just for a second. This candle right here, that red candle was September. Matter of fact, let me clean my chart up for a second. Take everything off. September was right here. Why is that candle so key? Because we've ranged inside of that candle for 1, 2, 3, 4, 5, 6 for 6 months. And really, I could go back. It's kind of a trick question, almost analysis. September was the candle, sure, but we really were ranging inside of June. So if you couldn't look at a month chart and see this to understand why all of your favorite stocks were or were not, and probably were not really moving, it's because we got stuck in a range. The market can only do 3 things. It can only do 3 things. We're in an uptrend, we're buying, we're selling, or we're ranging. We're trying to decide what's the direction. We're trying to decide. We're thinking about inflation. We're thinking about quantitative easing. What is Jerome Powell, Fed chair, going to say? Like, we're thinking about all these different things. We're watching, but nobody's putting a lot of size on the table. Nobody's really buying. Big institutions are just, playing it a little safer because everybody's waiting on a catalyst. We need a reason to buy. We need a reason to buy the same way we need a reason to sell. Fear makes us sell. Good news, positive earnings, companies doing well makes us buy. It's really that simple. But if you can't pull up a chart and see and realize, oh, wait a minute, the market, okay, we've been ranging inside of the June candle on the month chart on the S&P. We were ranging for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 months. So if you're wondering, right here, that's 11 months. All in this blue box is 11 months. And it happens. In the grand scheme of things, if you're a long-term investor, yeah, it happens. That happens. It happens. Can I find some other year-long ranges? Sure. Of course I can. Let me find some good ones, though. I know there's a couple. Oh, I went back too far. This is 2008. So this is the recession right here. That's the recession. Right there's the recession. Here's one. Look at this area. Look at this. Look at that. That's matter of fact, let me count how many bars that is. I'm on Thinkorswim for those of you guys who are like, hey, what are you using to do all this, right? That's 22 weeks. 22 months right there. From October of 2014, we didn't break the highs of this blue box. We did not get out of that range until July 2016. That's 22 months of the market going nowhere. All right. So you got to be able to see these things so you can have some context. All right? You can't be mad you didn't make a ton of money last year. The market didn't go anywhere for you to make a ton of money. If you were an investor, you should have stayed stuck to your guns. You should have kept buying. The biggest returns in the market over the last 120 years, the biggest returns come 3 to 4 years after the biggest losses. When was the last big loss? 2020. So 2023 has been very bullish. All right. Matter of fact, let me show you 2023. I'll go back to the week chart. I'll get rid of this for a second. And I want to put a line in the sand. Where was January? Where was January? January was right. First week of January was right here. What do you see? Uptrend. Push up, pull back. And pretty much, I mean, I could kind of technically right in here, we kind of ranged a little bit. So I'll be really technical. All right. That's been 2023. And the last time I was live, it's been a minute, but the last time I was live, I said the exact same statistic that you can Google and find. When does the stock market have its largest gains, largest moves up, cleanest, clearest, most amazing uptrends? It tends to happen 3 to 4 years after really, really bad periods. So COVID was March of 2020. What's 3 years later? March of 2023. And where was this low? This little low right here on that candle, right here. Right here. This began March. All right, this was March of 2023. 3 years to the really bad. It's just statistics. It's just data. It's just analysis. If you knew these little rules, it would kind of help you just to have more perspective. Once again, that's all it's about is perspective. So that's the 3-year recap. 3-year recap really quick. We had COVID. We had a 2-year amazing run. We had a downtrend that virtually took us into a downtrend that then basically walked us into a ranging market. So super clean uptrend. Should have been making money. Downtrend. If you don't know about puts, if you don't know about hedging your bets, if you don't understand shorting, if you can't explain what shorting is, you're going to suffer during those years. You're just going to suffer. There's really not anything you can do. You don't know enough. Right. And then those, what did I say? 12 months of just ranging, really not going anywhere, not breaking the new highs, not breaking the new lows, which is good. Right. And then March, literally 3 years from March of 2020, March of 2023, market has been pretty clean. It's been going up. So that's the analysis, high level. Let me show you the chart again, just so you can see it one last time. One last time. I need you to imprint this in your brain. I could have drawn this literally without having a chart. That's how much I've seen it. That's how much I've studied it. That's how much I've been in the market actually trading. All right. Any trader, any decent trader should be literally, you should be able to draw this from hand. You should be able to walk people back through the last 3-4 years just because you've been in it. So once again, 2 years really clean, amazing uptrend, really, really steep. Downtrend, we just changed direction. And that downtrend, people did not want us to go into a true recession. And we didn't. We haven't in terms of stock market. I know price and inflation has been, I know I want to cuss, but I'm not. You know, it's been serious. Everything's expensive. My God. It's inflation. So how you going to get your money back? How you going to compensate? Better put some money in this market. But you got to get educated first. Right. Okay. So let's do this. Let's pull up the stocks that people wanted to take a look at. What time is it? 8:36. So what I'll do today is I'll go back through. I'll go through your stocks. I'll give some commentary. I won't go like deep technical analysis. I really want to use my system, my technicals on everything. But once again, you don't know my system. You don't know how it works. So I don't even want to try to show you and then do you the disservice of you walking away thinking you know how to use it and you don't. Right? There's a reason my courses are literally 70, 80 hours of content. And most of that is technical analysis because I want you to get the deeper understanding of what you're doing and why. Right? So, matter of fact, let me write these down so I won't have to keep coming back and forth. I'll write them down. And this is purely technical analysis, right? So, what I used to do whenever I would go live is I get everybody's stocks, right? Sometimes I have 30, 40 stocks, right? It's actual work. It's free, but it's work, right? So, and I trade, I really trade a small number of stocks, right? Less is more. I keep saying that. I've been saying that for the last 2 years. Less is more, right? You probably make more money if you kept trading the same 3 stocks over and over and you were patient and you just waited for those moves if you had a system that worked that way, right? So, today I'm not going to, I didn't have time to kind of, look at everybody's stock. Cause once again, you probably will name something that I don't trade and really don't even care about. All right. So usually I would go back, I'd have some time, couple hours, I kind of go across and, do a little, fundamental analysis, try to figure out what's going on, what's up with the company's balance sheet, what's happening with their product services, what's in the news, what's the rumors, take a look at the chart. I didn't have time to do that today. But I just wanted to go live. So we're going to take a look at Disney, Microsoft, AMD, SMCI. Put this one there too. Gold, I think we're going to look at GLD, which is I could look at gold futures. Let's look at gold futures. For those of y'all who are like, man, what the heck are futures? Let's look at gold futures. And then let me refresh this page really quick just to see if there's any others that I missed because I don't want to miss. I don't want to miss your. Okay, yeah, that's it. So not a long list today. And I'll be going live. I'll do this. I need to get way more consistent because I really do want to get back into the my normal flow. And oh, let me show you this really quick. So this is our page, Insider Trading. You'll know it by the classic gold bars. We haven't changed these in 10 years. Me and Joe talked about it. I was going to change them at one point, but it's there now, right? This market is gold, but you got to learn how to dig for it, right? So this is the page. If you're watching this on YouTube, go to Insider Trading on Facebook. Request to get in. Some sort of technology should let you in. I don't actually, invite people or request accept people. Like the technology does it now. So if for some reason it kicks you out, it's probably because your profile looks a little sketchy. Right, so don't be mad at me or Joe. Don't be mad at us. Don't be mad at us. Okay. So I'm back on my chart. So let's do this. I'll hit these stocks, give a little more commentary. If you have a question, I'll come back to the questions towards the end. And then that'll be it. That'll be it. So yeah, let's get started. Live market analysis. I've only spent 20, 25, 23,000 hours on technical analysis on charts. So it's usually my struggle is let me keep this simple enough so you walk away with some tangible, some tangible insights. What do I want to pop on my chart? Let me do this. Let me keep it simple for the day. You can see me pulling these indicators up. I'll type of EXP. I just want to put exponential moving average. I'll make this to 21. I'll make the I'll make it yellow. Okay. And why put a 21? Why is that so key? It's one of the first things that I learned. It's one of the first things that you should learn. Here's the real simple metaphor. for the 20 or 21 exponential SMA, simple moving average, exponential moving average. If you're new, you're like, what the hell does that mean? I'll tell you, I keep it real simple. This is the half court line on a basketball court. That's all it is. If you've ever played basketball or soccer, football, 50-yard line. Let's see, what other sport? I'll just use those. All right. What happens? Let's think about this for a second. What happens statistically? Basketball, I take the ball out. I pass to you. You're literally 1 foot inside of the actual court. If you were to take that shot all the way down, right, way at the other end, what's the likeliness? What's the statistical chance of you hitting that shot? It's really, really low. Right? The defense isn't actually going to even guard you. It's not even worth guarding you until you get where? Half court. That's where the pressure hits. That's where the defense, that's where the man-to-man starts. Maybe man-to-man actually starts, right, when you're taking it out. That's a lot more pressure. But right, generally speaking, once you cross half court, now you're in range. Now you have a higher statistical chance of hitting any shot. I know Curry has changed the game because everybody has ice in their veins, right? Every kid in America, right, thinks they're Curry. They shooting the shots, right? They looking away, all that. I know. And I actually would love to spend some time thinking about how he changed the game. He changed the statistics of basketball. It's so amazing. It's so amazing. So if you're at the 3-point line, yes, you can hit a three. You get inside the perimeter, probably a higher percentage chance of hitting a shot. Free throw line, really good chance. You're right there in that, right? You're right there in the box. Nobody's there, man. You better not miss a layup. 99, I don't even know the stat, but I'm pretty sure 99, 98% of layups are successful shots. Why? Because they're closer to the basket. But you don't even really want to shoot a shot unless you cross the half court line. So here's the metaphor. Made practical from a trading perspective. I'll go back to the S&P real quick. The recession of 2008, it basically started from under the 20. All right. This bar right here was the one. We were inside of this range, all right, for about 5 months. When that candle right there, though, that little one inside, when that one closed and we stayed down there, it was telling you I'm about to drop. Right. So the bullish markets always mathematically, they're always above the 21. Bearish markets on the month chart are always below the 21. It's really that simple. It's that simple. So if we go back to COVID, what happened during COVID? We went under the 20. Bearish. Oh my goodness, bearish. What's happening? Everybody's scared. Oh, you can't see my chart. My bad. I got to go back and do that over real quick. Okay, let's go back real quick. Okay, so here we go. This was back in 2008. All right, so we got stuck inside of this candle right here. All right. And then when this little candle, June of 2008 closed, June of 2008, I had just got my offer with Bank of America. So I started my career at Bank of America. First time in my life making 6 figures, earning my MBA. I started it during this. And that's why I started investing. Because it was such an amazing time, right? I know it was bad technically, but it was just an amazing time to start, right? To really learn and dig in, right? When really bad things happen, that's when you upgrade your skills. You don't upgrade skills during good years. No, you upgrade your skills during bad years because they tell you what's going to happen again. All right. So under the 21, bearish. Back above the 21, bouncing off the 21, all of that bullish activity, a tough rangy year. We talked about those 22 months. And then what happened? Back above the 21, very bullish. COVID, what happened during COVID? We came down, we tested the 21. We went way under it, but then we came right back above it. All right. So in its like simplest form, right? If you know anything about statistics, a bell curve, what's the average? Just if you translate statistics, very simple lines on a chart that kids can learn. The 21 is the average of the data. It's the average of this rolling, right, analysis of live data, right? So it's right there in the middle. All bullish markets will be above the 21. All bearishness will be below. It's math. It's not Noble's opinion. It's a fact. It's math. Okay. So I just had to do that just to get you, acclimated. Okay. So now let's take a look at oh no, I want to go to Disney first. Let's take a look at Disney. So what I like to do is whenever I'm analyzing, I think you should do this too. Start with the higher time frame. Look at the month. All right, matter of fact, let's go back a little bit. Where does Disney come from? Because some of you guys are like, man, I've never seen Disney in my life. All right. So this is Disney from 2008 recession till now. And notice how I keep jumping back to 2008. All right. That's 15 years smashed in one chart really quick. Why? Because I do what I practice. I practice what I preach. Start with the longer time frame to get the best view. All right. So Disney's a powerful company. They own Marvel. I'm not invested in Disney, so it's not. Don't get me wrong. I think it's a good company. I do, but I don't love it like a lot of people do. I really don't, and I won't even go into a lot of reasons because I want to kind of keep this mostly on technical analysis. As you can see, COVID hit. All right, we hit some new highs. Matter of fact, how high did we go? From the lows of COVID down here, 78, we ran up to 200. That's 160% return across 12 months. And since then, since those highs of March, we have come all the way back down to 85, which is a 60% drop. So from COVID, Disney, bigger story, right? You got to get the bigger story. What's the story? Before we get to the details of what you should do right now, what's happened? COVID happened. We popped up, 160% return. We slowly, you already know the S&P was in a downtrend, and then the S&P was ranging. But since March, the S&P has done really well since March. So when you see stocks that are not matching up with the S&P, that's telling you something. All right, that's telling you something. It's perspective. You should be able to know. And me personally, if it's not at least equally performing with the S&P or doing better, I really, for the most part, don't pay attention to it. Don't get me wrong. I still know about, right? I know about a ton of stocks that are moving, but I want performance. I want the best. That's what you should want. Players don't get drafted because they're subpar, can't make the all-star team. Underneath, if you will, the players in the all-star team. No, you get drafted because teams are making these multi-million-dollar investments because you should be an all-star every year, right? You should be matching up with the S&P every year if you're a quote-unquote all-star stock, right? Simple metaphors. So where did Disney go bearish? Right in here. Closed under the 20, danced around it. Ugh. So it's kind of stuck right now. I think you can see this. I probably shouldn't have to draw the box, but I will. We've just been ranging. All right. I'll get rid of this trend line for 1 second because I want to show you something. I don't even know if this will pan out. Sometimes I see things when I'm, just kind of doing analysis that I didn't per se expect to see. It's just live analysis. Okay, there we go. So I thought that might, yeah. So this is the point of like really simply taking your time with your analysis. These two candles right there, if you just drew that trend line from February of 2022, if you had that line on your chart, February of 2022, if you had that line on your chart, guess what? When we actually tested it here, which was February, wait, what was that? Oh, that's February. Okay, February of 2022 to February of 2023. It took a whole year for that line to be relevant for it to even matter. And this is the stuff that newbie traders and really, I hate to say, but lazy experienced traders don't do. Why aren't you analyzing and keeping these things on your chart? You can save it. Right, you can save the analysis, call it long-term analysis. You can save it and then clean your chart, take everything off, but keep your analysis. It's going to matter years later. It still does. The market does not move the way people think it is. This thing is slow and beautiful. It has memory. Things from 5, 10, 15 years ago still matter, which is why I keep going back 10, 15 years, even though I'm doing my analysis pretty fast. Right. So right here, that month where we tried to pull up and test right there on Disney. You can see it, right? Oh, hold on. Right there on Disney. Where were we actually going? Attempting to test the 20. Attempting to. And we always pull back to the 20. It's a statistical that when we do that move, that right, we'll come back to the 20. You've seen multiple charts where we're just bouncing off the 20, bouncing. Why does that happen? Statistical phenomenon happens in virtually pretty much almost everything you can name related to data quantitative analysis. It just happens. It happens in life. What do I mean it happens in life? You get really sick. Oh, you got the flu, you got the this. Oh, you're just not feeling good. And at some point you come back to your what? To your average. How you feel today? I feel okay. You're back at your average. And then, you're right back to sick again. Because your overall healthiness, you're ill, right? So right now on the month chart, Disney's sick. Disney's not doing well. All right. If I let me scale in for a second. Let's go down to a faster time frame. So if I pop this up and we just looked at let's go back to maybe March. All right, since I put that line in the sand with March. Because March on the S&P was when everything started virtually kind of bottomed a little bit. But we've been nothing but up since then. You know that, March, right? Because I started this analysis with the S&P. So that's March right there. All right, what happened? We got up to the 20. We tried, we ranged. Oh, we tried to get above the 20. Drop. And even just last week. What happened just last week? We hit the 20 again. Popped up, hit it. All right. So where's a trade though? Let's talk about trades for 2 seconds. Where's an actual trade? If you had that type of information, all right, and I know this just got a bit more complicated. I know you like, man, Noble, what just happened? Right. I just kind of had to do this to actually be able to see it the way I like to see things. And then I'm gonna go right back to a clean chart. So this little candle right here, there's a trade somewhere up here if we wanted to. If I'm just using the day chart, all right, I would say under this candle was a simple clean trade. And you already know the direction. You're short. This should go right back down to the low. The low was back here. Did we get to the low? Pretty close. All right. If I had to get a little more advanced for folks who just know a little bit more, you don't necessarily, that's the day chart. All right. Week. If you really understand multiple time frame analysis. When did Disney actually start pulling back on the 4 hour, knowing that we were testing that 20? This candle right here. All right there. So depending on how advanced you are, all right, if all you kind of, you're new, you're learning, and this is what I teach in my options class, then yeah, there was an entry here at 86, let's say 87. Yeah, we just went down to 85. We probably are going to go lower. It's in a downtrend. Had a little bit more skill, a little bit more time, sure. You don't have to trade on the day. You could have tracked the 4 hour, a little bit faster. You only get 2 candles a day. But where was this reversal candle on Disney? It was right here. All right, so it was up at 89. All right, so your entry was there. And where are you hoping that it gets to? What's your target? The same target that people are trading on the day would trade. The low, 85. So it was more money. Clearly, this was a bigger move. From 89 to 85 is bigger, right? It's more money than just 87 to 85. But you need a bit more, right? It's about skill set. If you can bounce around these time frames, if you can learn how to say, hey, we're testing this really key 20. If all you know is a 21, we're testing this 21 on the week. how do I sneak in though, right? How do I kind of sneak in a trade, right? Because you already knew it, right? You knew Disney was was down, so that's easy. But where do you take the trade? There's multiple places, and it just depends on your time frame, right? You're a working professional. All you can do, working professional. All you can do is right. You don't have time to day trade. 4 hours too fast. Day trade. You don't want to look at the market every day. You want to trade, but you don't want to become a trader. And I think people need to really think about that. Do you want to become a trader, or do you want to trade and make money? There's a difference. There's a difference. You want to become a trader, live this lifestyle, wake up, go where you want, have the freedom that I have. Oh, it's going to cost you something. Yeah, it's going to cost you something. Get ready to get ready for some sweat and blood and time and perseverance. You're not going to master this overnight. All right. But if you're like, hey, I love what I do, but I want to take advantage of the markets. Of course, I want to make more. I want to trade. I don't want to necessarily become like a full-time trader, but I do want to be able to use options, this amazing, Black Scholes, advanced calculus, right? This amazing way to basically buy stock wholesale. It's like going to Costco. That's all options is. It's going to Costco. All right. You're buying 100 shares for 80, 90, 95% less than it actually would cost to buy those 100 shares directly as an investor. All right, that's why people trade options. The math is amazing. All right, so there's trades everywhere. Trades everywhere. Right now it's bearish. I wouldn't get anything right now because we're almost at the bottom, right? So, but clearly, the direction. For right now, we're bearish. We're bearish, right? So that's Disney. I'll go faster when I do the rest of these. And I actually need to put the exponential. Oh, I need to save it though. Let me put that back on my chart real quick. Exponential moving average. I'm gonna make a 21, make it gold. I don't want to save it. I'm gonna just save it as 21. And then real quick, I just want to change one of these buttons. Oh, yeah, I got Biggie, Tupac, Eminem, Sam Cooke. I know you're like, what the heck is that? Names for my studies. That's all. My study sets. I give them names. That's it. So 21. Okay, there we go. So now I can bounce back and forth. Okay, so this is Microsoft. Let's do the same thing. Let's go back to the month. Microsoft, one of the most amazing stocks in the world. I think you can see why. I don't think, there we go. I don't think you probably don't understand that Microsoft's amazing. Just look at the chart. And I'm an Apple guy, but I'm not stupid. Oh, this is an amazing company from a capitalist, I want to make profit on it from trading it and investing in it perspective. One of the best companies in the world. Just made new highs last month when the market didn't even make new highs last month. So think about that. All right, so let's do this. Let's go back. Let's find March of this year. I do the same basic kind of overlay of analysis. So let's go back to March. March, where is March? March is somewhere right there is March. What do you see? We started March sitting right above on top of the 20. The week of 313, we got a nice pop. Somewhere here, I'm sure we've had, let's see. Oh, we had earnings right here. All right, so that really nice, strong week candle. Earnings was here as well. Came down. Sitting right now at the 20. Back to average. Back to its average. Back to its average. So right now, is it bullish? Yeah, it's bullish. Why? It's on the right side of the half court line. It's on its own half court. If you're bullish, if you love Microsoft, right now it's not deep in there, right? So you're shooting a really, right? You shooting that far away three, right? But we're still bullish. We're still above the 21. We're above the average, above the mean. And these pullbacks are called regressions to the mean. Regressing to the mean, right? That's the statistical MBA, right, term for it, right? So where are we going? I don't know. Let me look at something real quick. Oh, So really, really great uptrend. If you had the good old Noble Woods system, you would have had a trade right there. You would have had a trade right there. All right. So we got under this area. All right. So 325 down to like 311. What is that? $14. That would not have been a very long options trade either. Would not have been a long trade. Matter of fact, let me look at one more thing real quick. Is there anything down there? Oh, okay, got it. So this little short just to ride down to the 21, right? That for me, for my students, for what I teach, that's a reversal. You don't have to you don't even have to worry about reversals because I told you this stock was bullish. It was. But if you're a really elite level trader, you really know how to make money almost at any time. It's just which trade do you want to take? Do you want to stay with the main direction? Is that long trend? Matter of fact, let me take a look at that. I'll draw another trend line that's gonna blow y'all away. See that? So this trend line that should have been on your chart, right? Where did price drop to? That trend line. You should be in before we get to a trend line. That's Noble's view. I know a lot of people teach, oh, when we get on the other side of the trend line, that's when you go this direction. If you're a really good trader, you should be making money. And think about it. I don't know what's going to happen when we get to a trend line. We might break it. We might go, price might drop. I don't know. We might hit it. We might go through it a little bit and go the other way. We might get stuck and kind of range in that area. I don't know. Right. So what makes more sense? I want to be in if I want to take that little pullback. If I'm okay with shorting on a stock that's clearly bullish, you're basically buying the pullback. If I want to do that, I got to know that I'm doing that and be very clear that I'm taking that trade and understand, right, just the risk in that inherently. I don't have to take reversals. You could just wait for things to go back bullish. I can make money either direction. Which one makes the most sense? Which one, based on the analysis, right, do I want to do? And I think when it comes to trend lines, you should be in the trade before we get there. That's the layup. That's really what you want. Right? Because you know where it's going. It's going to the trend line. Right? Or really, really close, right? You already know. So having clear targets is, is actually I feel like that's one of my best, weapons, is just having really simple but sound targets. I hear people talk about key levels. As soon as I hear somebody say key levels, I'm like, you probably can't trade. Because key levels means I got all this special weird stuff that I've made and patterns I see and all this stuff. And it's like, man, if you can't see these basic macro level areas that every trader trading this should be seeing, that's problem number one. All right, so Microsoft right now is sitting at its 20. Could we go lower? Yeah, we could go lower. We're about to go into September. It's historically, toughest months of the year, September, October. So yeah, we could go lower, right? But for right now, we're sitting right there, slightly above the average, inside a bearish candle from last week. All right, so we might range for the next 3 weeks. I don't know. But the last trade, I can always show you the last trade because I actually, in my head, have a system. You should be able to make money on anything you trade if you can trade it consistently, right? So that's Microsoft. Let's look at AMD. I'll speed up for time's sake. Oh, it's 9:06. Oh man, I'm taking my time today. Okay, so this is AMD. You know AMD, you probably love it. Semiconductors. Where is COVID? COVID's right. No, that's not COVID. Wait, where is COVID at? Where is COVID? Oh, it's back here. Oh, there we go. Okay, it's that little candle. So COVID was right here. It's March. I want to do the same thing. How much did it go up from those lows? Man, AMD went 350%. Whew. AMD went up 3. So if you don't know about AMD, you should. You definitely should. Is it following the S&P? Oh, that's what that was. Next week, y'all join me next week. I'll compare some of these to the S&P. There's a way to do that with Thinkorswim where you literally can overlay both charts. I won't do it right now because I have to go back and change some stuff. But okay, so uptrend crossed over to 20. Right here was the last little hope. We pushed up to test it. We dropped a little bit lower. Right here, right there. We tested it. Doji, confusion. Cool. Pushed above, got above it. So let's do the same thing. Let's look at March of this year. Let's look at March. Actually, let me go to a week chart. So March was right there. You see how these are aligning? I started with the S&P. You know where exactly the S&P became bullish, or really where it started to move off of its 20, above its average. You want to buy when prices are higher than their average. Now I know some people say buy low, sell high. I'm not going to lie. That's a really complicated statement. I'm totally okay with selling low and buying high if the volatility is so high that I'm going to make easy money. Right? And you could buy low and be buying all these dips, but if the market is in a downtrend and buying all these dips, you're actually just losing money. You're not doing right. So depending on how deep we go, buy low, sell high does not work. Depending on what we're talking about, right? And we throw these mantras out and everybody adopts it and everybody says, oh yeah, buy low, sell high, and it makes sense. But that's actually a complicated statement because I could show you statistically when it makes sense to buy high. And when it doesn't make sense to buy low, because low actually means strengthening downtrend. Why you buying when we're low? Now, if we're talking about investing, okay. But even with that, that can be really tricky. Because I don't want to invest in a company that probably has the potential for going into a downtrend for 5 to 6 years when the S&P is not in a downtrend. Those are the companies you don't want to, right? So it's that buy low, sell high. I know it sounds cool. It makes sense, but there's some meat, there's some layers to it. We talk about it from a price perspective and not this like statistical lens of what actually makes the most sense and has the highest probability. I just want to make money. All right. And you actually have an amazing chance even at the high of the high going higher if you can see volatility. And right. So anyways, okay. So AMD, what happened? We pushed up. Where did we go? We came right back to the 20, little hammer candle off the 20. Stop streaming to Facebook. Oh, okay. So that's weird. Stop streaming to Facebook for some reason. Let's see what happened to the live. Somebody asked. It dropped. It may be a Facebook issue. I was on. They both went at the same time. Dang. Okay. Okay. So yeah, that sucks. Hopefully you can still see me. I can't control the internet. I got like the best, fastest business class, internet that I can buy. So I'll just go back to the charts. Okay. So right now, same thing. Earnings for AMD was right here. We had a really nice move up for the next 3 weeks. 4 weeks, we made these highs at 131. We've pulled back. And if you pay attention, all we did, we're just ranging inside of this candle. That candle right there, we're just ranging. We peaked above it, snuck back in, bounced off the bottom. So just trying to figure out where we're going next. That's all. Can we break lower? Yeah, we could definitely go lower and come down to 80. We can. It's possible. Sure. The squeeze, TTM squeeze is getting lower. Volatility is slowly easing out. That's not a good thing. It's not bearish. Clearly, it's not bearish, but if all these bulls who have been trying to make money during these, how many weeks is that? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 weeks, right? That makes traders tired. And all the people who didn't have enough time on their options contracts, you lost because you didn't have enough time. We didn't go anywhere for 14 weeks. You can't be mad. Sometimes the market does that. So AMD is kind of stuck right now. We'll see what happens next. It's not in a downtrend. It has reversed a little bit, just a pinch, but we're trying to figure out, right, if we can get outside of that really bullish bar. Let me see. Supermicro Computer Incorporated. I'm gonna go back real quick. So this is one that has done really, really, really well. Really well. Man, COVID is right there. Sheesh, I don't even want to look at this. So COVID was right there. Oh my God. This thing is up 2,243%. SMCI. Super Micro Computer Incorporated. You should look that up. When you see people like me go over stocks like this, right? That's amazing. Something to take note of. So let's go back to March. S&P took off. Everything else took off. So where's March? March is pretty much back here. All right. And even just from March to these highs, from these lows bouncing off the 20 to the highs, that was a 312% return. All right. So pretty amazing stock. Very easy, simple, small pullback. Sometimes you have, and kind of think about it like this. When I was talking about sometimes buy low, sell high doesn't work. I won't say it doesn't work, but sometimes it makes sense to buy high. So if all you knew was this, if we could go back and we're here, and this is the most current candle, would you have felt comfortable? Matter of fact, I'll go here just to make it simple. Little pullback doji, right? Positive earnings. Would you have felt comfortable buying above this candle? Somewhere at 145, 143. Some people, right, would have said, nah, you don't buy low, sell high. And then what happened? You would have missed out all of this because you don't understand volatility. The volatility doesn't care about buy low, sell high. The market can go as high as it wants, anytime it wants. Don't tell me you can't buy at the high. Don't tell me you can't buy at the high. It makes perfect sense to do that when everybody else is getting in and the big institutions are buying, which is pushing the market higher. Yes, of course you want to buy high if it makes sense, if you understood volatility. All right. So where we at now? Really big candle. Earnings was a little ugly. All right, so let's go to the 4 hours, see if I can find that earnings. So it was right here. Ooh, so we closed that day at 346. We opened the next day at 297. And even here, right, we crossed back on the 4 hour, back under the 20. Oh, shoot, wait. Uh-oh. Oh, there we go. Charts acting up. So right here, there was earnings. Right? Got back under the 20. Under. So we're still under, right? So think about that. The 4 hours bearish. 4 hours clearly bearish. The week is bullish. All right. The day is bearish. All right. So depending on what time frame you're looking at, you might get a different view. All right. You're listening to people, on podcasts, in the news, and on Twitter. You don't know really what they're doing their analysis from. People don't give you all of the details when they're just talking and telling you and giving their opinion on stuff. You got to know how to do this for yourself, and it's math. So I could care less what somebody says. The chart will tell you what to do by itself. All right. So I'm on the day. I'll stay on the day. Matter of fact, let me see something. Yeah. So we're probably going to come down a little bit more. We're definitely not finished. We still could pop back up to 280, but even if we pop back up to 280, we're still inside of this bearish candle after earnings that the market did not like. So think about that. Think about that. Sometimes you got to figure out which perspective are you going to take. And I know I keep bouncing around different time frames. That's just because I understand all of them together and separate at the same time. So I try to give you guys what, I know you don't see from folks who kind of, go live and do this. It took me a long time to be able to just confidently, easily really be able to trade on any time frame. All right. And my system works on every time frame. And I understand how the week and the month correlate, the week and the day, the 5 minute and the 1 minute, the 4 hour and the 30 minute. All right. These different time frames correlate. So, you can just trade on one time frame and keep it real simple. Cool. Right. But, if you really want to, I would say, master the craft, then yeah, of course you got to learn multiple time frame analysis. Because once you get it, you got it. And then it's simple. So this is gold. I guess the last one I look at today, gold. Let me draw some lines. So made this high. Oh, you can't see it. Froze up for a second. Made that high, pulled back. All right, bounced. Testing the 20 again. Tried to get to the high, couldn't. Went through, right? We went through the 20 here, but we just went lower. All right, we really went back to these highs here. All right, so what was here, we got stuck for about 3 months. That resistance right in here, resistance becomes support. So right in here, we kind of got stuck for a while. It took us a while to kind of really take off, drop from there or get through it, right? We were right there in that area, 159, 160 for literally, what is that? 1, 2, 3, 5 months. We touched it, we got above it, we came back to it, we finally we finally bounced off it to go higher. All right, so if you take your time and do your analysis, you can see these areas. And then what did we do? We came right back to 160. Bounce back up. Where did we go? We tried to get back to the high again. Tried to get back up here. Double tap, if you will. Came right back down to what? Right back to 160 again. Same area. Push back up. Where we at now? It's almost a triple top. Pretty much got right back up to 190 3 times. Cannot break 190. You should see that. Can't break 190. So we're in a larger range. And this is the month chart. All right, so we're really kind of stuck. We really haven't gone anywhere. This candle right here, which was what was that? July of 2020. Look at that. If I bring that down to this 160, we just big, huge, ugly range, right? So okay, but can you still make money? Yeah, you can. Of course you can. So let me go down to a smaller time frame. Let's go to the week. So we came out of that area where we knew price could go to because we had already identified it as old resistance that's now support. 160 was probable. We keep dropping back to 160. That should be clear as day. It took me 5 minutes to do this analysis. I don't trade gold. Man, the analysis wasn't hard, though, to see that area, just to know that that area, right, had some importance because price keeps coming back to it. We keep buying every time we get there. Push back up. So look at this, right? All these weeks. So you could have been bullish all in here. You had plenty, right? It's a nice, nice move. Really nice move. So it looks like we had a trade right here. We had a trade right here. You had a reversal right here that took a while, but it did get right. It's not the best. You got to be careful with reversals. But right now, this 200 right here at what is this? 170, 168. If the market, because September, blah blah blah, S&P comes down, then actually, well, gold has an inverse relationship though, so gold might actually be possible to go back up. Just depending on what the market's going to do, because the market was bullish today, right? So. Let me go back to just the basics. So yeah, so there was, once again, and I really am not trying to tease you guys by going in and out of my systems, kind of showing you where specifically trades are based on how I trade, but I know how to trade, right? So I can't give it away free and I can't teach it all right here in a class. You know what I mean? It takes time, and I want you to get this as a craft for those people who are really serious about being able to do this right for the rest of your life, whether it's full-time or just part-time. Even if you just use the week chart, hell, that's great. That's what most people need to do. But right here, there was a nice move. After this little small pullback, there was a nice move there too. You could have took this reversal, right? If you have made, right? If you took these two trades, this is why I say keep trading the same thing over and over. Because if I was trading gold, even just on a week chart, I would have been in this trade. That was money. I would have been in this trade. That was money. All right. So if here I decided I wanted to take this reversal, I'm just trading house money. I'm just trading profit. And you don't have to take reversals. You really don't. You can just wait for, right? That's the only thing I teach in my classes are trends and reversals. If you can see those two clearly, you can do some damage. You can do some damage. So let me check one more thing here. Where is that at? Let me check something real quick. Where we at? Oh, I'm trying to find it. Where's my thing? Okay, there we go. And then let me see. Okay. So I had some issues with streaming. Not sure where we are at this moment. I'm gonna get some better music. I like this little beat. It's real like intellectual chill for me. All right. I could play this and like wild out to some charts for like hours on a Sunday just to get ready for the week. But I'm gonna find something better. So let me do this before I go. I want to say a few things to you. And the main one is this. Registration started today. If you're on my email list, check your email inbox. You now can go through all of the information on the sales page, details page, information page. I break down how the class works. I break down the problems I'm going to solve for you in class. I break down how the class will flow. I have testimonials from real students, and I'll probably have maybe 6-7 interviews coming up over the next week, because I got a lot of people who are making money because they've learned a system, and very few educators and traders in this business are actually teaching systems. No disrespect to anybody, right? But if you can't understand if you don't have a statistical lens, price is one thing, but only talking about pricing patterns and charts, that's not elite level. That's not the highest level of this, right? Because once again, this is data analysis and price forecasting. That's all it is. So for somebody like me, 7 years of business school, Indiana University, got my MBA at Clark Atlanta, worked in agencies, worked on the brand side, worked on the agency side, a lot of quantitative analysis, love breaking down things. My last job in corporate, I was on a team that basically was doing corporate training for hundreds of thousands of personal bankers, bank managers, right? Making sure that the companies, right, the business goals, right? We were progressing towards those goals. So I know what I'm doing. I teach well. I love teaching. And I can probably take you a lot deeper in 4 weeks than you even believe is possible. So if you're a working professional, man, business owner, you got to get serious about this market. You have to. I talked to a guy today. I did a quick photo shoot. Shout out to my guy, Reus. He's probably never going to see this, but whatever. And I told him, I said, bro, you're doing photography for celebrities. Jermaine Dupri, what's her name? I can't even think of her name. She's beautiful too. Anyway, he's right. He's in there, right? He's shooting, right? That's my guy. Amazing photographer here in Atlanta. And I'm like, bro, you better get serious. You gotta learn this options game. Because if you have healthy cash flow, why aren't you taking 5% of your revenue and putting it in the greatest companies in the world? Why aren't you trading, giving your options trades time giving them time. And you can buy shares too. Companies actually buy other companies. Right. So I want to get business owners to really hone in. If you're not buying other businesses and using some of your healthy cash flow to buy other businesses, to trade other businesses, right? If you're not thinking about it, then okay, cool. I want to plant that seed. But if you need the skills and you're ready to really take it up to another notch, I'm here for you. So thanks for watching. You're going to see me advertising, talking about promoting this class because the last two have been amazing. I'm not going to lie. They've been amazing. They've been amazing. So go to, actually, you know what I'll do? I'll come back and post the link so you can get on the email list. And you'll see any ads or any posts from me. I'll be talking about it all the way up until September 25th. Because I want to help. I do. I really want to help you. You guys need more than basics. You need sound teaching. You need people with heart, with integrity. You need people who love the quantitative side, who can break it down and keep it so simple they can teach kids. I start teaching kids first. All right. So I'm not about the ego and, just all of the, I want to be this, bigger than life, world's greatest, most amazing. Man, stop. No, it's about helping people by giving them the skill set and really quality education. And it takes a lot of time to put these courses together, but I love it. I do. So thanks for watching. I'll see you next Monday. Share this video with somebody that you know and that you love who needs to get serious. Wealth is a mindset. I was wealthy before I started actually even making money. Even back, literally, all the way back to 08. Wealth is a mindset first. Right? It's deep, rich value for who you are, for how God made you. You're imbued with wealth. Period. But how to get this money out of the market, you're going to need some skills. You're going to need some skills. All right. So anyway, talk to y'all next week. Thanks for watching. Peace.